Which leads me finally to a prayer that I'll read, which was also handed to me a couple of days ago, delivered from the lead mission planner of Sandy 1. Sandy 1 were the A-10s that were a part of the daylight rescue mission of 44 Alpha, Dude 44 Alpha out of Iran. And if you know anything about Sandys, their job is to bring those A-10s and put them in between the enemy and that down pilot. And so their job is to literally sacrifice themselves for someone else. And in Iran, in contested territory, that's exactly what they did. They call it Caesar 25:17, which I think is meant to reflect Ezekiel 25:17.
Well, there's this passage I got memorized. Sort of fits this occasion. Ezekiel 25:17.
The path of the downed aviator.
The path of the righteous man
is beset on all sides.
And is beset on all sides.
By the iniquities of the selfish and the tyranny of evil men.
It's by the iniquities of the selfish and the tyranny of evil men.
And I will strike down upon thee with...
And I will strike down upon thee with
great vengeance and furious anger.
Great vengeance and furious anger.
For those who attempt to capture and destroy my brother.
Those who attempt to poison and destroy my brother.
And you will know my call sign.
And you will know my name
is Sandy 1.
Is the Lord.
When I lay my vengeance.
When I lay my vengeance upon thee.
And amen.
All about the gospel, but I also know that you cannot let a certain country, which is a very mean-spirited country, have a nuclear weapon. If they did, they would use it, and I think they'd use it quickly, and they would kill many millions of people. So, you know, the Pope could disagree with me on that, but certainly we're allowed to have that. I'm all about the gospel. I'm about it as much as anybody can be, but...
Hey guys, Carlos Cortez here, another episode of Scriptures and Wall Street. I hope you are doing well. Today I just wanted to simply just talk about market updates, TMF, and what I see, in my opinion, what is about to come. And we've talked about this for years now, but I think we're getting closer, in my opinion. Before I get into today's episode, I just want to say my disclosure here. For everything on this podcast is obviously information and education purposes only. I am a financial advisor. I will not be giving investment advice on this podcast, but if you would like a consultation, you can reach our office, 813-448-3446, or you can simply book a consultation or a meeting to go over your retirement at cortezwm.com. And simply, like I said, you can call us 813-448-3446. Also, if you haven't had a chance, if you don't mind, go over and check out Rumble, Apple Podcasts, as well as Spotify and YouTube. We are there under Scriptures and Wall Street. You can like, subscribe, and pretty much any of those platforms. As we do have an audio podcast, this podcast is also on audio format as well. If you more of an audible person in the car on a go, totally understandable. And I would try to reframe the video podcast side so that it's easier to follow even on the audible side. So thank you for your patience with that. And thank you for your patience with a lot of the phone calls we've gotten. Man, we've been bombarded. I had to hire some extra help because of you guys have been calling. And thank you for that and for your patience. As you understand, there's a lot of stuff going on. I'm only one person, but thankful that we have a well-equipped staff that can handle your calls and handle your needs. So I'm here. I'm concentrating more on podcasting and sharing some light on some issues that I feel that are triggers in retirement, that are observations, whether it's spiritually or even financially. We want to make sure that we are shedding some light on not just your concerns, but also problems that is concerning. One of those being, when is that market going to really come down? And is that market actually a depressive or depression-like drop? We see awesome people like Harry Dent. You got to take him with a grain of salt, we understand. But he is right in many avenues. I mean, he called the prediction in 08 as well as 87, and even the credit crisis before leading up to 2008. So he is basically sounding the alarm on private credit. And we spoke about private credit, and I want to get into the banks. I want to look at KRE as well as the VIX and some ETFs that actually do very, very well on a market crash. You see, a lot of people still are in the camp of buying these puppies. And I know I've talking about so much ad nauseum about precious metals, but I want you to understand the programming that we have been inundated ad nauseum, that you're supposed to buy precious metals because it's safe. You're supposed to buy into your 401k to get your match. You're supposed to invest in your IRA to get the tax deduction. You're supposed to buy the house with the white picket fence because you need to live the American dream. You're supposed to get a job, go to college, get a job, get $100,000, $150,000 in student loan debt just to get a $40,000, $50,000 a year job. When are you going to break the cycle? When are you going to stop being programmed? When is that going to change? When are you going to do not what you're programmed to do, but what God has challenged you to do? So the programming from the mainstream media, from the norm, has always been there. We have been destined. If you went to a prison-style public school system, which is basically a prison camp, this is why they have concrete walls, just like the prison. Same infrastructure as a prison is in the public school system. I went to a public school system, so I'm very familiar with that. And they actually run the system, the school system, like a prison. It is daunting, in my opinion. It's daunting, the public school system, how they continue to indoctrinate children at multiple facets. So if you have children, get them out of public school because it's not good for them, spiritually as well as academically, in my opinion. And if you're listening to this and you went to public school system, you probably could relate. And that's a good thing. So we have, BlackRock buying millions of Bitcoin. We have tankers now coming to the United States to fill up because the Strait of Hormuz is closed up, supposedly. We have consolidations in the markets. And people are saying the fiat is going to happen now. The reset is going to happen now. And for many of our clients, they don't worry. They don't worry because we're backed by contract law. And this is the power of Green Money Solutions. Green Money Solutions is insurance on your money. We walk and talk. We basically go around life with our cars, our homes, our pets, and we have insurance on everything. Heck, you can gamble and buy insurance at the blackjack table. You could be a criminal and buy prepaid legal service insurance. You have insurance on your home, your car, your life, your health. We have insurance on everything. I have a little 4-seater airplane. I have insurance on that bad boy. I have insurance on the school that rents out my little 4-seater airplane. They have insurance on their, dude, it's so much. But yet people go to the banks and they legit think they got insurance on their money. Please, if that's you, stop and make a consultation with your doctor to see if you're okay. Or just look it up. Do I own the money in my bank account? Go ahead, stop the video, stop the podcast, and just say, do I own the money in my bank account? Ask your chat GPT, ask Uncensored AI, ask whoever OpenAI source you use, or even Google, and ask it. Just simply ask it. You see, we've been programmed to think that we did land on the moon. We've been programmed to think that the vaccine worked. I know you guys don't think that, but this is the mainstream media. This is what happens. We've been programmed to think that you have to get a financial advisor that works for a big bank. You've been programmed to think that all the mainstream brands are the best and the store brands are not as good. We've been programmed to think that some cars are better than other based on the cost of it. A Toyota Camry gets you just as much as far as a BMW. It's It's wild, man. The programming that is involved in our everyday life cycle, in our everyday thought process. And we got egos, we got patterns, thought patterns. There's so much to unpack there. I really don't want to deviate from what I want to talk about. I really want to get into the charts and just kind of give you an update on the markets. And man, if you guys have been following me with the QQQ index, I want to show you something pretty awesome. Really, really awesome, actually. So let's get to it. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. So obviously the Fed chair is going to be coming out in May here shortly. And Donald Trump is basically saying interest rates are going to go down like crazy once Kevin Warsh becomes the new Fed chair. I don't know if this is a guarantee. I don't know if this is actually going to happen. But look, interest rates going down may not be a bad thing, but it's going to cause financial turmoil in the banks. It's going to help you out. It's going to lower the cost of everything. But we will have a deflationary period where if you're not prepared for, guys, I'm telling you, you got to start preparing, because once these interest rates do go down, people are going to be buying more and buying more. But what will happen is as we go to a deflationary period, think of the baker. The baker buys yeast. The baker says, you know what? Yeast is $1,000 a bucket. I don't know. I'm just saying, maybe they buy in buckets of yeasts, and it's $1,000 just stick with me. It's $1,000 a bucket, whatever the grams and ounces are. And he needs that to run the whole week to bake bread. So if that bucket is $1,000 and he knows that the cost is going to go down next month or even next week or 3 weeks to $700, guess what that baker is going to do? He's going to pause. He's going to hold on and really just try to lower his costs so he can get an ROI on his business. So he cuts cost by waiting another week or two. And then, sure as heck, it doesn't go to 700. It goes to 800. And he buys the bucket then. But he waited. And so what that actually did, he missed a whole week of profits. Those profits could pay his payroll. So what ends up happening is he noticed that interest rates are coming down. Prices of goods are going down as well. He waits another week because he buys it every Monday or every Friday for the following week. So he bakes fresh bread. Now it drops to 700. So now he buys another bucket of yeast for 700. He's like, man, I think it's going to go down to 500. And he doesn't wait 1 week. He waits 2 weeks. Well, guess what? He's not able to make payroll. The employees are not able to take their kids to daycare that week, that month, pay their rent on time. This becomes a ripple effect on the business owner. The consumer loves it because prices are going down, but the business owners have built their business on higher prices, and they will wait. As a business owner, I'm telling you, they will wait for their inventory costs to go down, and they won't have the cash flow if they don't prepare for that deflationary period. So deflation is traumatic at a bigger scale. Now you're talking about chips. You're talking about oil. You're talking about pretty much every single business that will be affected by a deflationary period. You add in the manipulation of silver, the dollar, actually. We'll look at the dollar here shortly. And how the dollar pumps up, your precious metals go down. And for many of you, there's no backstop. For many of you, this is your safety, the precious metals. And that's a scary place to be, because at the end of the day, it's still red money. You have to make sure your dollar crashes in order for your silver to go up. I don't like those odds. You know, as much as people talk bad about the president, talk bad about the politics, when was the last time you actually prayed for our president? When's the last time you actually prayed for your enemies? When's the last time you actually prayed for yourself and your family? I know what Trump did. He posted that stupid picture of supposedly a doctor and Jesus. But just imagine for a second, all the junk that he's in right now. Could you do a better job? Could everything be scrutinized that you post? We say we're God-fearing Christians. We say we're God-fearing patriots. But where is the grace? Remember, when Jesus died, urinated on, he got speared. They freaking whipped his skin off his back, and he had to carry a 400-pound cross, half a mile, beaten up. And he did it because he loved the people that killed him. Can we just get 1 ounce of that? Can we just practice 1 ounce of that? Doesn't have to be 100% Jesus-like, because that is not me. As much as I want to, well, my actions speak louder than my words. I cuss. I hit people a little too hard on the eyes. I get road rage. I get angry. I maybe have smacked up people I shouldn't have smacked up. I've snapped at my wife. I've snapped at my kids. And I'm a worship leader. I've sinned. Where's our grace, guys? That was stupid for Trump to do that. Really, really stupid. And although he may have Israel first and not America first, it doesn't matter. Because it shouldn't affect your retirement. It shouldn't affect your walk. It shouldn't affect your whole divine element and alignment with the cross, with your daily routine of waking up and giving God your first breath. It shouldn't affect the 10% that you should be tithing to your church or to his kingdom. And we should show more grace. And I really like what Mark Driscoll said. You know, it's very, very easy to be angry. And the internet runs off fear and anger. I get that. It goes viral. But you know what doesn't go viral? Is actually peace and comfort. Look at peace and comfort or grace. A lot of times those videos don't go viral like the ones that are based on fear and anger. Those are ones that go viral. I want you to think about that, man. Like, how does that communicate to your life? How does that relate to your faith? We have peace and comfort every single day when we put our knees towards the cross, when we ask for forgiveness in our mindset, and we do an introspect on what is wrong with us, and we get real vulnerable with ourselves. But when it comes to social media, and yeah, Trump kissed the wall, I don't agree with it. I don't agree with this whole Israel supremacy that has been taking over the financial system, that has been taking over the children, every single sector. I totally get it, and I stand with that. But at the end of the day, Jesus died on a cross. He was the strongest, most masculine man we knew. But his grace supersedes his physical strength. His grace actually makes you tremble if you really think about how beautiful his grace is. So I think we need to practice more grace. Because I know that if you did that post, I would have this belief system and pick up all this evidence on why I should hate you and why I should have resentment towards you. But if we are truly believers, if we truly, truly believe in what we read and what we actually believe, then you have to show grace, because there is no spot in heaven for you if you have hate in your heart. Can I get a amen, somebody? There is no spot in heaven for you if you have hate in your heart. Just can't, man. I just can't do it. And I'm glad I'm not the president. I'm glad I'm not in politics. Maybe one day I'll run. I don't know. Truth be told, like when I was in college, God told me that I needed to be on a ballot somewhere, and I just been running away from it because I just like this. I like the podcast. I like helping people, and I don't know. I just, maybe I've ran away from that calling. I don't know. That's something I'm working on. But I just don't like politics. And I think if I was to ever run here for my state, I would expose a lot of people, because I'm not money driven. I am not money driven. I make my own money, and I don't need the money from public service, nor would I give a flip about lobbyists. So, but we've heard that story before. We've heard successful businessmen turn. And I believe everybody has a number. So I would rather be in front of the camera, share my heart, have an audience that actually can relate to me, and help every single family member avoid what is about to come. Because I believe that God has called me to be a financial steward and a shepherd for others, so that they can continue their walk, so that they can retire. They don't have to worry about not just a stock market collapse, but a social security track system that is designed to literally destroy you. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. So yeah, before I forget, my ADHD kicks in here. Let's simply talk about one index that has pretty well. Now I want to explain something in regards to the QQQs. So, and particularly in Green Money Solutions. So there's a few things you want to learn about, or actually learn and acknowledge, simply put. So the QQQ index literally made 49.5% in the past 12 months. In order to get that 49.5%, you would have to be okay with risking it all. Now, many of you that are going into retirement understand that it's nice to get a 50% return, but you also understand that you cannot lose 25, 50% in your retirement. So in order for you to actually get these big tech style returns, you would have to risk everything. Now, maybe you're okay with red money, but maybe you're just like, you know, Carlos, I like the big tech returns, but I also want somebody to manage it on a downside. What if I told you that you could get big tech returns right off the coattails of big tech, but if it ever goes down, there's a system in place, two systems in place. First, the index itself could actually put bumper rails and move to cash or treasuries while the index does go down. And more importantly, if the index actually goes down one whole year, your principal is guaranteed, locked, and insured. Well, that's what Green Money Solutions is all about. And so now we're able to do this on one of the best and most recognizable cutting edge indices in the world, the NASDAQ, the QQQ index. So I wanted to show you. What I love about this particular index is the longer you hold this account, the better the returns get. So in 2010, 22%, a 3, a 18, a 24, close to 19. I'm rounding off. 15 was a 3. 2016, it was a 0, -2. 2017, a 35, a 5, a 26, a 21, a 15, -20, which is a 0. Following those big losses are big gains, a 30, a 4, and right now, year to date, last year, it didn't do too well in 2025, 0.65. However, it is on a tear right now. And what I love about this is on that 1 year standpoint, it's made over 11.64%. And here's that chart. So this particular index is going to follow the QQQ NASDAQ. Most of our clients, if you get the bonus, you're going to get a good 75% of this index with no fees and no risk. Or if you said, you know what, I don't want a bonus, just give me 100% of this bad boy. Right now with the rates, they're giving you 110%. Pretty substantial. So if you got in just earlier this year, in April, early of last year, this time last year, you got in at a really good price point after that NASDAQ fall off. 67.56. Now it's at 73.75. Guys, that's over 10% right there. And those gains get locked in your retirement. So this is a really cool account, a really cool index, because what actually happens is what they do is they move, as high as 70, 80% sometimes in the actual NASDAQ that produced a 50% rate of return 1 year. And then when there's some form of volatility, as you see in this red, they increase their bond exposure to the 10-year. So it's not just all cash. So they're going from the QQQ to treasuries, collecting a yield, QQQ to treasuries, collecting a yield, and they can move this and calculate and rebalance it every single day if they wanted to. Not just weekly, not just quarterly, not annually, but literally every time there's volatility, they can move back and forth. And you could see the sleeves that they did. So in July of 2021, they were 120% in the QQQ, and also they can leverage their return. So when it's really hot, they could actually leverage on it. So which is huge. So right now the current sleeve is at 62 and about a 60-40 blend from cash and treasuries and equity in the actual index. So what I want you to understand is that when they go negative, when the index goes negative, they have a sleeve and a backstop where it will simply just go to cash or treasuries, avoiding those massive losses that we just saw last month. So you have to be comfortable. If you were to hold the QQQ index, yes, you would make money long term, I believe, but you also would have these downward cycles that are devastating. So for someone that's retired, you want the growth, but you don't want the losses. This is a great substitute for that because you get the best of both worlds. So the first backup is the index itself is going to have bumper rails. They're going to lower the volatility by increasing that 10-year treasury and a small position in cash. The second layer of protection is also the insurance carrier itself is going to guarantee the gains that you made last year. Those are getting locked in and principally protected, written, insured, guaranteed, and protected. But if the index does go down, all the gains that you've made the previous years, minus your withdrawals, are now considered principal protected and a part of your account value. You have insurance on your money, not like the FDIC, not some wishy-washy type of FDIC insurance. This is actual guaranteed, principal protected. Going to need something going into 2026 and 2027 with this private credit crisis that we are in right now that is unfolding. And we're going to look at KRE, we're going to look at VIX and SPXS. We're going to look at things that we could honestly make money off of when that market does decide to crash. And it will be pretty bad. But this is going to be a great avenue for those of you that feel like the market's going to go down, but you still want to make some of the upsides and you don't know how to do it because you're speaking to a red money advisor that only knows the stock market, that only knows long term, like you're in it for the long haul. Every single advisor will say, oh, you got to stay in it. You can't get emotional. You can't do this. You can't do that. We're not retiring tomorrow. It takes time. And all that is true. It does take time. However, if you're 65 and you're trying to retire, or even you're 55, you really have the time to make up 5 to 7 years of losses. If you've lost money in 2001, it took you 67 years to make your money back. If you lost money in 2008, it took you 7 years to make your money back. So you don't have the time. And it's a lot smarter. Like if you had something like this, an index that would actually protect you when the market does go down, because eventually it does. Now you're sitting on a gold mine and you truly have insurance on your money. And basically you can rest easy knowing that, hey, I have some form of backstop here within the index itself that is smart, that's going to be calculated, it's tactical, and world-class money managers. And more importantly, if they all screw up, my backstop is I'm protected by insurance contract law that literally helps me from creditors, that helps me from the FDIC, that is tied to my life because we open these accounts with life insurance companies. Not that we're buying life insurance, we're buying an index account. We can open up an IRA with an insurance company, and now we're insurance contract law. That sounds a lot better than buying these puppies. Because show me where the insurance contract law, show me where the contract on this that says my principal is guaranteed. There's nothing guaranteed about your precious metals. And so this is why a lot of people will just cancel the IRAs. They'll cancel everything. They'll take home equity lines just to buy precious metals. And it's the dumbest thing ever because now you're walking away from safety to risk and speculation. And what's the word of God say about all this? Said wealth doesn't come hasty. You'll lose it all. Like, let's be a steward. Don't say, oh, this is God's money. Oh, don't say that God told me to do this. No, those were your feelings and you got in the way of God because God blessed you with that principle. Steward means to guard it. It doesn't say you have to grow that account every single month. Yes, it is smart, but the first and foremost thing is safety first. You cannot lose that money. Then you take calculated conservative risk with multiple sources of buckets of money. Maybe you have a little bit in yellow. Maybe you have a lot in green. Maybe you have a lot in red. I don't know. But having yellow money that actually will help you achieve some growth while taking risk, calculated risk, by the way, you're hiring professionals, smart money. And with green money allows you the ability to grow with an index at a limited level, right? Because let's just say you bought the S&P 500 and there's a cap of 8%. You can't make more than 8%. The S&P did 16. Well, guess what? You made 8%. Those get locked in. The insurance company made 8%. You're both happy. And that gets compounded, never, ever loss. But yet we're chasing 4% CDs, 4.5% CDs in an account that we don't even own anymore because you forfeited your money to the bank. You literally forfeited your money to the bank. You hope and assume that your bank is liquid enough and solvent enough that they could give you your money back when you call upon it. Every day when you wake up, you take that risk. So it's time to realize with private credit going bad, this is going to affect all of the financial world. This is going to affect everybody because the private credit is stuck with capital ventures, real estate, a lot of employees in those two sectors alone, the banking industry. It's going to, like, if this really falls and the ass end comes out of it, guys, I'm telling you, man, like if you're not prepared to either make money and hedge yourself off a crashing market, and we've seen that precious metals is not guaranteed to go up when the market goes down. It didn't go down. I mean, the market has been down this year. It's finally popping back up. What has silver and precious metals been doing? It's been going down. Also, it's not also a guarantee that when the dollar goes down, your precious metals go down. We saw that in 2024. I'm sorry, in 22 and 23. So what you thought, I challenge you to really start to think, hey, is this in my best interest? When's the last time I looked at charts? When's the last time I did not listen to the hype? When's the last time I just pulled up Yahoo Finance or Bro Investor website or Trader View, like I do every single podcast, and actually looked at the chart? You're smart enough to know what goes up and what goes down to pan out over a 5-10 year period or 1 year period. Maybe you're you sold your home and you have $500,000, your house money in the bank, which is scary, when it's easier to put it in yellow money, get out of banking laws, and actually get treasuries paying you a yield, and your principal is not guaranteed. However, it is completely safe. It is very, very safe. Because if the government doesn't pay their treasuries, then we got bigger issues than money. So you might as well get a 4%, and you actually own the account. You actually can withdraw all of it like instantly. You got to wait a day to sell out of it, and it'll be in your account of your choice the next day. Like, that is control. You don't have control when you have money in the bank. I'm sorry, you don't. The only thing that you have is the right to withdraw if the bank is okay with it. You got to basically ask permission to take your own money out. Like, literally, you have to ask permission. So when you walk into a bank and you say, hey, can I get $500 out and maybe 5 Benjamins? You literally ask permission. You think that was set up by design? You know the word teller? Hey, tell her that, back in the day, people would go to like any bank rep, say, hey, can I get $500 out? And he would say, tell her, not me. So teller came that actual name. And what's interesting is that the contracts that you sign with the banks, they completely have 100% access to all your money. Even for me, I only keep operating expenses in my bank account, and the rest I invest in green money. I invest in crazy options and our yellow money accounts, real estate and other alternative assets. But that's just me. I also like day trading. So what I'm getting at, guys, is that you need to start making some plans in event that a market does crash, particularly if you are close to retirement or you're trying to retire. And here's why I say that. All right, so we see the NASDAQ popping up. This is TQQQ, one of my favorite ETFs. This is 2 times the NASDAQ. And we got bullish power here, short term. But what I really want to show you is this. So I want to go back to the bro investors, particularly like the fake media. I want to see what they're saying about all this. And look at private credit is worrying Wall Street. Here's how it may affect everyone else. On top of everything else pummeling consumers right now, spiking gas prices, grocery bills, and uncertain job markets, there's a wild card lurking in the shadow corner of corporate finance that could pile on even more pain. The wild card, private credit, is the wild card, an umbrella term for borrowing and lending, the ecosystem of borrowing and lending, basically. And the letter says that skittish investors in private credit have been asking for their money back, and the worries have quickly spread to the rest of Wall Street. Private lenders, tempted by ever fatter profits, getting a little lazy in vetting borrowers. Is AI adoption taken over with a torpedo effect into software companies? How private credit affects you. Whether you think private credit is good or bad, more on a debate in a moment. An undeniable that is now much bigger part of the financial scaffolding that has ever been so a decade ago. After the 2008 crisis, banks get more strict about lending and small, mid-sized businesses that didn't even meet higher standards to find funding elsewhere. Private credit, at the time was just a few specialized firms to pick up the slack. Now, fast forward to 2026, the private credit is a lifeline for small and mid-sized businesses rather than the last resort. In part because the loans are typically flexible and tailored to specific business needs, global private credit assets under management have soared more than tenfold since 2007. Moody expects private credit to roughly double in terms of AUM, assets under management, to $4 trillion by 2030. If the gears of the private credit slow, many of these companies could lose access to loans that allow them to expand their operations, or in some cases, keep businesses from going under. Would that alone tank the 30 trillion US economy? Probably not. But while a number of businesses tapping into private credit lines have grown substantially, it is still relatively a small slice of the whole pie. And then it goes on, talks about Jamie Dimon, the CEO of Chase. Basically, he's very cavalier about it. And he basically says, gave that bullish view something of a surprise boost last week, writing in his annual letter to shareholders, private credit possibly does not present a systemic risk. There's much of a rosier assessment that his musing last fall that there more likely were cockroaches lurking in private credit after two high-profile defaults sparked controversies and concerns about lending standards. So he reiterated his confidence this past week, telling analysis that he's not particularly worried about JP Morgan's $50 billion exposure to private credit. Of course, he's got that Janet Yellen, remember, is strong, safe, and effective when the banks were going belly up. She said the same thing. So the bottom line is that if private credit goes down, businesses don't have a lifeline. Because of '08, the banks got tighter. What they did is they basically got rid of bank bailouts and established bank bail-ins. So banks couldn't loan to small businesses like they used to. Thus enters private credit, private equity, and now banks can go directly to small business owners. Small business owners can go back them for merchant loans and quasi buyouts, revenue profit sharings for injection of money. And what it does, guys, you add in deflation, you add in all the stuff that's happening. Private credit could be just massive. So I want you guys to understand that even though CNN is talking about this nonsense, they're talking about it a little too late. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. We're talking about it a little too late. We've already been talking about this for a long time. And so let's go to the charts. Another reason why I like TMF is because if there is a private credit crisis, this puppy is going to skyrocket. People are going to move back to treasuries. They're going to get away from gold and silver. They're going to go back into treasuries, and this is going to pop like crazy. The other cool part about a stock market crash is it's well overdue, by the way. But we can't buy the volatility index, but we can buy VIXI. And right now, VIXI has a sell bar going on. So, I mean, it's going to get lower. I mean, the stock market's going to go up. But it's cheap right now at $27.69. So this is pretty volatile. The average trading range is about $1.50 on this puppy. So if the market goes up today, you can expect this to go down a good, to 25. So right now, this is at $27. It's pretty low. In fact, all-time low as of recent history, because I can't even find it when it was a lot lower than that. It makes sense because the stock market is pretty much high. So as the stock market rises, this gets lower. But when it does crash, you'll notice that this puppy will skyrocket. Like for real. Look at how high this thing just went. Look at that. In the thousands. I can't even squeeze that far down. And for those of you that are listening to audio, I'm looking at a big chart here. This was at 20, almost 4,000, 38.54. And before that, in 2017, it was at 8,000. So right now it's at 27. You are better off, instead of buying, the next surge on precious metals, you are better off buying one of these derivatives. Of course, not investment advice. I'm just speaking information, education purposes only. I'm telling you, these things do well when there's a market crisis happening. So you can't buy the volatility index, but you can buy VIXI, and you could buy some call options, maybe even at 35 a year out. Get it very, very cheap. Don't put a lot of money into it, please. And this will protect you on a market crisis. The other thing that's going to protect you, other than Green Money Solutions, is SPXS. This should be crashing down really good right now. So we're getting it on sell. It's below the 200-day moving average. We got a purple box here insinuating a death cross. Next one will be a red box as price has entered past the 200-day moving average. So this is at a complete sell-off, and it's doing pretty well from a price standpoint. So 30.96. This also moves about $1.55 a day on average, and that's on a daily chart. Let me show you a 4-hour chart. Yeah, so this has a really, really good draw down here. And as you guys know, you want to buy things when they are at a low, all-time low. This is when you purchase, when everybody's rushing back in the market. You look at this bad boy, and this is how you clean up. This is really how you do very well for yourself. So as you notice, every time we get a purple box, it goes below that 200-day moving average, and it pops up. I mean, the market went down, and then it hits this ceiling, so to speak, called resistance. We get another purple box. It goes down below the white line, which is 200-day moving average, and we buy it again. It goes back up. The pattern has been the same for years. Now we got our purple box here, and it's going down. All right, so when this goes down, so I like SPXS. More importantly, another one would be that I want to look at is KRE. So when the banks go down, this stock should go down, but now they're pumping it up. We got a blue golden cross, like everything's fine. Jamie Dimon went out, and all right, the market loves that. But here is the banking cabal. It is going up. Yeah, what private credit crisis? No big deal. No big deal. Let's pump this sucker up. And right now we're at 71. If you guys followed me for a long time, I was talking about KRE when it went from like 65 to 38. You guys remember that? Right over here back in March of 23. Dang, look at that sucker just drop. It went from 60. Yeah, it went from 65, 64, 18, all the way down to 36. Yeah, I remember that. I was all over that, if you guys remember. Since then, KRE has been up, and away, ebbs and flows, but mainly all up. They're ejecting so much stimulus into the financial markets, into the bankings, that it can never go down, it seems like. But again, this is where the problem happens, because once they stop stimulating the economy, it will calm down. It will come down like a house of cards, guys. So be very careful with KRE. This is not investment advice. I'm just sharing this as my opinion and education purposes only. We got a blue cross here, a golden cross. So this should go up. Also, the average trading range on this is about $1.48. And just want you guys to realize that KRE is going up. And also that, you know what else is going up is the dollar. So notice this big spike in the dollar. This is when your precious metals went down. Now precious metals should be going back up while the dollar is going a hair down from 98 to 97.5. But we got a golden cross here. So that means that momentum is going to pick back up. The dollar will be pumping back up as soon as it makes this turn. We're starting to see a little bit of momentum on a daily. Here's a 4-hour chart. I know you guys online on radio or podcast audio only, you can't see my chart, but what I'm looking at is a downward spiral on the dollar that has a huge chance for a reversal right now, as my RSI momentum indicator is bottoming out and is starting to point up. And so right now at 97.58, the dollar futures should be going up here any day right now on a 4-hour. Here's the day. So we could see a reversal here. If this happens, then your precious metals will be going back down, possibly even lower than 65 on silver. So just be careful, because precious metals is red money. And if you're tired of red money, if you're tired of all of these manipulations, then give us a call. We have a plan for all this. You don't have to suffer alone. You can simply just give us a call, have the ability to protect your principal, get into green money, an account that never loses value unless you take money out and spend it. And if you're okay with only sticking to 10% or less a year, there's companies out there where they guarantee your principal, and you can grow with an index that has volatility control already built into it, so that you can actually potentially grow your assets in high single-digit numbers to low double-digit numbers on an annual basis with no fees and no risk. It's that simple. So give us a call if you're interested in that. I'm here to help you guys out. Again, my name is Carlos Cortez, founder and host of Scriptures in Wall Street. Please like and subscribe our Rumble channel, our YouTube channel, even Spotify. And with that being said, if anything I said resonates with you, give us a click on CortezWM.com and you can book an appointment there. You can scan a QR code, or if you're old school, we like that too. 813-448-3446. Again, I'll repeat it again, 813-448-3446. Again, Carlos Cortez with Scriptures in Wall Street. God bless you guys. And let's get in shape together. Don't forget to get your peptides from Get Me Lean USA. Very safe and effective, because it's plant-based as well as animal-based, and it's subscription only, so you can cancel anytime. Get the lean, get the fit. I love the energy one. And the calm helps me and my kids go down at an appropriate time and stay asleep with no interruptions. But man, this stuff is so good. Go to getmeleanusa.com. My little shill for them. Anyways, guys, I'm out of here. God bless, and we'll talk soon.